Good morning, everybody. Excuse this noise going on here. Some work happening. So, big turn of events. And as dire as things were looking on Friday, we take a look at crude oil and bonds, but it was like institutions were beginning to price in the end of the world again, and guess the world shutting down. And we'll see what actually happens. One of the thoughts I had over the weekend is, I guess we all did, is this just an overreaction? One guy getting COVID, he'd been vaccinated, he had boosters and all of this and shutdowns. And anyway, I guess we'll see what transpires today. I just decided to start out with the Dow. I mean, it had this big gap, and now these are the diamonds, the ETF. 352 and change, 353, gapping above the high of a red bar. It's a good start to the day, but that is a big gap. 353. I'm just going to put the price on there. Anyway, 353. Give or take in the area of the 50 MA. No. Three chances. I got to get it right this time. All right, just above the 50 MA. Maybe it goes for the gap fill. Now it's got a gap below. So it's going to be a tug of war as far as this chart goes between hitting the unfilled gap here, or going back down there, or possibly stuck in the middle. Not everything looks the same. We're going to spiders. And still pushing up here, 464 and change. Just above. Just above. Oh, I see. Hold on. I just wanted to be able to see the prices on my, as I move to the up and down the scale there. 354.64, 364.26. Oh, so right there. So gapping above the high, which if it can hold on to it, would suggest that's a low. Gapping above, I mean, it's a gap down, a range expansion bar, and gapping above the high, plenty of overhead resistance. Now, when we look at resistance area like this, something that I learned years ago after seeing how prices could just cut through that like it wasn't there. And you see, well, geez, look at the size of it. My goodness, how could it get through that? Well, in reality, none of this really matters. Meaning this, none of this matters. How could that be? Well, it traded above and below. So I had to come up with guidelines or rules to the thought process. And what really matters is what's right here. None of this over to the left. It's irrelevant because this is what we're going to trade today, trade off of, let's say. So as it comes up to this level, it's right at the bottom of that pivot low there on the 60-minute chart. And you can get a bit further, but so what is the probability of getting through here? Well, it's hard to say. I mean, but what we'll do is we'll see what happens in the first 5 minutes, whether this gap up gets sold immediately or whether it hangs up there or advances. And so as we looked at the Dow chart and said, oh, we might just get stuck between these levels, we got a similar situation here on the spiders. So when a sizable gap, what are other traders going to want to do? Keep selling into this resistance area, which maybe it keeps going, because once it got through here, they're very much going to stop it from going back up to the highs. But that's a long ways off from any of that. So SPX, yeah, I think 4,700 McGraw. But you know me, I'm always going for a little extra safety for a little less. And so I've got written down 4,700 and 4,705. which puts us up here, right? So we've got a pivot high up there. Got a pivot high, right at 4,700 and a little bit. So even if the gap up gets some legs to go higher, when we look at charts and we look at support and resistance and trends and how the structure of that price action looks, it brings us to a thought of what are institutions or traders likely to do? I mean, no matter how much money you have, you're assessing risk to reward. All right. So the gap up being what it is, and assuming prices keep going higher, do institutions and traders want to keep buying aggressively up at resistance after it's traveled that far? The answer to the question is really, we don't know, but we're looking at probabilities. And so just based since prices have traveled, I would say the probability is low. So 47 is a big whole number. There's last week, the big open interest there. It's going to be a sticking point for that level. And so, 47.05, would it make much difference? Well, it just might, as far as, if it gets up there, the uncomfortableness of, okay, what do I do here? Because you're at an inflection point. Yeah. Yeah, I saw it as enough, go a little extra. And then on the downside, considering the bullish open, there was enough premium to go down to 45.20, which is just below the 50 MA. So the idea of being stuck between here, it's gone now. Yeah, okay. Thank you, McGraw. Yeah, well, I guess you were looking the same as me. So I don't know where there is. I have to go check it out, but how close you want to get to that point. Friday's low, 45.65. And they're bringing it up pretty quick. Well, we'll reassess that. I think the high odds trade is, the gap up, the premium, that increase based on this going up and higher. That'd be the way to go with fading that. All right, let's take a look at the futures. Good morning, Fabio. Row it. And everybody else there. Qs retracing into this bar. And so consolidating at these pivots, what do I want to see here? Well, if it's going to roll over, it's going to take some time. And usually what this would do is push up above the highs and fail. I have to wait to see if that happens. Looking to the left is resistance there. It came up and pulled back, and here it is. And a little spike up here, some sideways price action here, and then maybe a push higher. And I would think Friday's high would be about the extent of where it might go, that's way up there. That would be quite a ways. Anyway, let's see if it can deal with this area here. We've got a downside shakeout pattern so far. Overall, it's going sideways after the move back up, and that's bullish price action, even though it got clobbered. Russell looks pretty darn good, and it's got a void, but the way it just got destroyed on Friday, and a little downside push up. It's got nothing really. Well, it's got this little cluster over here, but it's been dealt with over here a couple of times. I wouldn't put much weight on it. It's hard to say how far it goes. So while I'm not a indicator person or a aficionado, if I can pronounce that, Fibonacci aficionado, I think trader pivot lines, they may be the levels that come into play, as well as, let's just say, a whole number. Boiling this, I don't know if this lines up with any kind of line there, mystery lines, I'll call them, but that whole number may be the sticking point. We'll see. So based on the thought process that I go through, is like, hey, there's nothing here to stop this from going up. This is subjective. It's beyond what's directly to the left. So does that mean it has to go up there? Of course not. There's the unknowns that could, some other market turning down. So it has to create price resistance in here if it's going to stop. And then typically what happens, it would be something like this, where not so much how this came up with a wide range bar, but comes up, it pivots, it retests the pivot, and then turns down again. But it would be more likely for that to happen if this had just shot straight up, after the V bottom shot straight up and then pivoted. So this has created a pretty nice little support area down here. And look where it is on the weekly chart, which is totally crazy that, after a year-long base and breakout with a wide range bar, this has come all the way back down like that. This market is borderline insane. All righty. We looked at the diamonds, the Dow, and giant bar there, and, on some support. S&Ps, right down there on the cluster that we looked at. I know, Rich, I'm trying to be, me, I'm really not the one to be politically correct, but I guess I slipped on that one a little bit and said borderline. No, it's freaking schizophrenic. And I wrote in the letter that this market where institutions walk on eggshells, meaning they're afraid of missing out. Overall, we know the action is bullish. We know that there's risks growing, whether you measure that on valuations, extended from support on the monthly time frames, and they see some reason to sell, and they just hit the bid in unison as a herd. Silver looked like it was holding earlier. Now back down again. Just more of the same kind of monster moves up and monster moves back down again. Gold, same story. I mean, it just looked fantastic. And all the way back down. We'll see if it can start to rebuild here. There's a new contract trading here. Let me just look at I think I have here we go. That's what I was talking about. Like, institutions reacted on Friday. Maybe it just was a thin market, holiday and all of that. And, the new guys were at the controls and got scared. Who knows? But the reaction was the world was going to be locked down on Monday. And, it was going to be the same old thing again. And here we are. And not much happening out there. So Giant moved down there to support the 200, actually pushed down through it. So now, obviously, a damage chart. There's damage everywhere. And we'll just have to see how much it all gets repaired in the short term. Bitcoin, that broke down. There's another gap up. So many of these charts are going to be dependent on, do they hold on to this gap up and gain this morning? And so tomorrow, are we looking at a chart like Bitcoin and saying, hey, if we never looked at the news and said, hey, whatever happened on that given day, it was a fluke. It went down, and that spike down and that reversal and a green bar, and this may push further in there. This would suggest that we have a low in place. We don't like the way it came down, granted, but it's going to point out that there's a low in place. So we'll see how this day unfolds. The dollar's been pushing higher, and that came down and it's up a little bit here. Let's look at the euro. Just keeps trending down. You can see on the weekly chart, I've got this level marked off here. So we'll see if it begins to stabilize here and if the euro starts pushing up. Really nothing was left unscathed. While the transports were at resistance and were consolidating nicely, prices down significantly. The airlines got pounded. Cruise lines, casinos. I mean, everything was, you know, here we go again. The world's shutting down, and now, counter reaction here this morning. It's crazy. We'll just see how it all unfolds. And yeah, yeah, yeah. You trade from 5 minute chart, but you never mark support and resistance on the 5 minute. Rowan's asking me, not true, Rowan. Everything is marked, meaning on the S&P, I'm not marking things here. I don't use this platform for futures. Well, I can look at it, obviously, as you see that I'm using NinjaTrader, and I set up NinjaTrader has something just like this, right, where I don't have this on all the charts, but you just duplicate it on all charts. So when I mark off, I use the hourly chart and I mark off where resistance is. It then puts the same, whatever, I've got this down here. It puts the same reference point on the 5 minute chart that I put on the hourly chart, and where support is, it's on the 5 minute chart. So these areas are set up to put them right on top of every time frame I look at. If it's an ES chart, that reference point from the higher time frame is going to be on the smaller time frame. So the 5 minute time frame, as you can see, all moving averages are pointing up. That says think long. Next step in the process is, can it go higher? Is there anything to the left? Well, if I look at S&P, this little cluster of opens and closes there is to the left, but we talked about to some extent it was dealt with, and it's got room to go higher. The significant area is up here. So these moving averages tell me what's happening in multiple time frames. Marking off my support and resistance is going to be on my 5 minute chart. And this is where the focus is as to bias and entry points. So here's the short overview of support, resistance, and multiple time frames. All yours, Dan.
Good morning. Not only is this an amazing gap, but it's been an amazing turn higher over the last 90 minutes. That's, is what it is. And we were talking about, could it be an overreaction? But, market doesn't care what we want. But I saw this thing selling off also after the market closed early. I mean, look how much further it went. Totally, just, totally looked lower. I mean, Greg and I were talking about, I wonder if we should have done a lottery ticket bullish position. And the problem with that is volatility was so high that, I mean, which one would you buy? I mean, those put premiums are going to get absolutely destroyed this morning. We're still in these IWM puts, Boeing, held, we closed our eyes, held through. So let's just have a clear head this week when the volume and people come back from vacation. So we'll just take it day by day. So our opens are fine. In the weekly options trader, we have a bunch of trade ideas in there, both long and short. All right, Myrna, it's getting another boost here. The logic is Corona is going to be with us forever, and people are now going to have to get annual shots. That's kind of the story. Oh, Bill Ackman came out last night, and we always talk about, okay, well, what story is being peddled to the public? So Ackman comes out and says, oh, this coronavirus thing is good for equities. I didn't read his rationale, but obviously part of the obvious explanation is going to be that the Fed is going to not delay the accommodations as fast, because now they can hang their hat on this, just like they have been over the last year, and employment not being to their satisfaction, which is why they've kept their pedal to the metal for so long. Some Bitcoin penultimate bull was on there today, also giving his rendition of why Bitcoin's going to be $60,000 or $100,000 in 1 month by the end of the year. I mean, do the math. 42,000 divided by 57. It's whatever percent that is. He thinks we're going to rally that much in a month. I mean, if so, he should mortgage his house. So we'll get whatever money he can and make 42% whatever percent. $42,000 gain in a month. All right, Hubs. JR's asking about Hubs. Hubs long. No. There's no pattern. There's no price void. It's opening flat, so it's relative weakness today. No. I mean, you know, we got these big gaps. I'm sitting on my hands at the open. I have absolutely no idea what to do. I don't like big gaps. Just like on Friday, the gap down messed us up. Zoom says, say it, you know, we're getting a bounce because the word on the street is was an overblown reaction. This new variant's not as bad. So that's going to help. You know, it's just unwinding some of what exactly happened on Friday. So tech's bouncing, you know, the whole market's bouncing. The beat up airlines and cruise ships and hotels are bouncing. And some of these stay-at-home stocks are going to be lagging, so that's where Zoom's coming in. But we'll keep an eye on that. Actually, we were in 2 hotels that went against us. Wow, Greg, remember we unwinded and sold our $75 put on this H. Wow, that turned out to be a home run decision. Made $250 on that long put. Hilton, we hung on to. Yeah, Boeing, I'm still in that too. Yeah, and well, I did the same thing on this one. I sold my long put just like I did in Hyatt. So that was working so far. Hertz, I just saw this thing moving up this morning and bottoming pattern here. You know, gapping over these highs. Let's watch that 30-minute high. Disney, I just posted. Climactic buy setup, gapping up, 30-minute high. We can sell put spread. Shop, I read, you know, we have the Black Friday thing, that they had record sales. It's really not doing anything here. It's underperforming broader markets. Holex had a gap breakout. These diagnostic companies were rallying with the drug companies. Costco is on our watch list as a bear call credit spread. It's just getting extended here. Its measured move was met. So maybe 30-minute low. We do a call spread. AON. Oh, Greg, you mentioned that one in the letter. AON. PayX. PayX looks lower. Under Friday's low. IBM was a bullish cover story on Barron's. 118, so let's keep an eye on that. IMAX had a positive Barron's, but no pattern. THRM, this had a positive article in the EV space. I think I read a sentence that they make like the majority of the heated seats in cars. I mean, there's no great pattern there, but it's gapping up to Friday's high. I'm sorry to the holiday messes me up to Wednesday's high. So that's a bullish gap. There's another article mentioning these 3 EVs. XPEV we're actually in. And then LI. LI has a nice gap. That's worth watching. Put LI right there. Then I forget the third one that they mentioned. Apparently I didn't like the chart. Okta here, climactic buy setup. Look at that. That's fluid straight down move. So that has an easier time to go back up. I'll put Okta over here. My H up alarm just went off. It's nice. Wow, they're getting a nice rebound. Crazy price action. What are you thinking, John, on FedEx? That's not a good pattern for that. And the bearish gap down. Logi, I think, was mentioned in Barron's, kind of a stay at home kind of thing also, but that's a bearish gap into the gap fill here. Roku is lagging today, stay at home, same with Piton. So, they're just unwinding some of Friday's story. Echo Whiskey, if we could get a bear 1, 2, 3, then that's worth watching as a short. DGX, I mentioned. Donut over to highs. Looks higher. This Camping World over 46, I like. Uber, sold off here. Nice reversal bar on support. That's a put spread watch. MSOS we're in. Riot, if it can get over Wednesday's bar, then this is a bear sandwich. Wow, the tick 1500. Wow, that's a big tick amount. MicroStrategy, we have a put spread, our naked puts for next week. So that's gapping up with Bitcoin. This is a 1, 2, 3, kind of gap and snap from a Climo. Hilton up alarm. Wow, this GPS and Nordstrom, they just got killed recently. All right, I'm glad we, sat through some pain on these things. Well, you know what I mean. I'm glad we didn't stop out at the low. So John, yeah, FedEx is not, that's a horrible pattern to do a put spread on. Bearish gap under these bars, under the big green bar. It's a sell setup on the weekly and a nasty engulfing. We actually have that as a call spread. Yeah, I wouldn't touch that as a put spread. LI here, I said, had a nice gap. That's acting very well. Our XPEV.